All right, so today I just wanted to come on and talk a little bit about my personal portfolio and specifically my investment strategy. And this has been a strategy that I've been working on over the last whatever year and a half that I've been investing. And I've been fixing it and changing it as I've gone on and as I've learned more. And I feel like I'm at a point where I can start to explain to others what my strategies, and hopefully you guys can learn from me a little bit and I can learn from you down in the comments because I always love to change my strategy. But right now I feel like this is a pretty solid strategy for me, and hopefully others can also implement it as need be. But to start out my portfolio, and I think from the start I was kind of I didn't really know that this was a good idea. I was kind of very, very heavy on stocks, but I think now I've learned that having a baseline of just the general market and following the S&P as a majority of your portfolio is very smart, and that's what I've done. 60% of my portfolio now, I make sure to always be made up of a mutual fund or an index like that follows the S&P 500, and I think that's important for me because I like having that sense of security in my portfolio. I know that even though my other investments may not be guaranteed to go up, this is something that I know is going to go up. Not obviously not in a given month or year, but I know in the long term it's going to go up no matter what, and it's going to go up a pretty good amount. So I think it's important to have in your portfolio. And for me personally, I invest 60% in it at all times, and the mutual fund that I use is called FNLIX, and it is Fidelity Zero Large Cap Index Fund. And this just basically follows the S&P. It has pretty much the same returns as the S&P 500 index. But the reason I chose this one over, I know there's VOO, SPY, other ones, is because they don't have a fee, which the other ones do. It's a very small fee, but this one does zero fee, so that's nice. They pay a dividend. I know the other ones do too, maybe a little more for the other ones, but also just because I was on Fidelity and it was convenient for me to use this one. It's through Fidelity. So really you can choose, if you were to create your portfolio differently, you could choose any one. I would just recommend tracking the S&P 500. You could obviously also track the NASDAQ 100. It's a little more risky, so that's kind of what my other stocks are more focused in risk. So for this one, I want S&P's a little more secure. So I choose FNLIX, but you can choose anything. But the big important thing for me is having 60% of my portfolio made up in that. And next up in my portfolio is 20% is made up of these, or sorry, 15% is made up of these more safe stocks. And these are stocks that obviously I think they're probably more volatile and more likely to go down as a whole than the S&P 500 and my mutual fund, but they also are safer stocks. Like I'm invested in Uber and Nike. Those are my two safer stocks, and those are stocks that I know aren't going to go down a ton. And I know could also go up a good amount. So they're safer stocks. I'm not checking them constantly. I'm not worried that they're going to go down a ton. And I've especially chosen. You can really choose any safer stock, for a safer stock, for it to be considered a safer stock, in my opinion, it needs to be big. It needs to be pretty big. Like, it can't just be like under $1 billion market cap, less than 1 billion, or like 1 to 10 billion. That's pretty small. Having the market cap like Uber does 160 billion, Nike 117 billion. These are well-established companies that most likely are not going to tank. And the reason I chose Uber and Nike is because, and I have other videos on this as well, but is because they've been down a little bit recently. And Uber hasn't really been down, but I feel like, have more potential. And then Nike has been down. Is because they're safer stocks, but they also have a lot of room for growth. And I made other videos on this. If you haven't watched them, you can go check them out on why these are good growth stocks. But I think it's important to have those safer stocks, but also to still have the safer stocks be able to grow and then to beat the S&P 500, even though it's very hard to do. So again, it's 15% of my portfolio. It's in these safer stocks that I'm pretty sure aren't going to go down a ton. And I think it's important to have also those on top of the S&P 500. And the reason I don't invest in more safer stocks is because with investing in the S&P 500, you're already invested in those safer stocks. That's what the S&P 500 is. You're invested in those big stocks like Amazon, like Tesla, like Nvidia, like Google, like Apple. So you don't need to be investing in them again. Uber and Nike are just two that I chose because I feel like they can have the potential to beat the S&P 500. But again, you don't have to have this aspect of your portfolio, but I think it's also nice to add on to that 60% with another 15% of these safer stocks. And then the next sector of my portfolio, I have two more. One more after this is my riskier stocks. And these are stocks that this makes up 20% of my portfolio. So again, you have 60, 75, and then 95. And this 20 makes up my riskier stocks. And these are stocks that, again, they could very easily go down a ton because they aren't well-established companies. I've already made videos on both of these. If you want more information on them, in-depth information, you can watch the videos on them. But Gorilla Technology and Rigetti Computing. These are two stocks that are Gorilla's $559 million, Rigetti's $2 billion. Again, these are not big companies. They're up-and-coming companies, that's for sure. You see Gorilla is relatively new. Rigetti also relatively new. Recently posted on the stock market. These are up-and-coming companies with growing revenues that I think could soar and beat the S&P 500, double it, triple it, whatever. I have very, very high hopes for these stocks. I'm very confident that they're going to go up, but again, they could go down. That's the thing. I don't know. I'm way less confident in these ones than I am in the other ones that they're going to go up, but I'm also more confident that they could go up a ton, and that's important. And I think it's important, since you're investing so heavily in these safer stocks, to have a little bit of risk in there. Again, it's only 20%, and I wouldn't invest 20% in these riskier stocks if you had a shorter time frame to invest. But for me, I'm investing for many, many years, so these stocks could very easily pan out for me. And again, I'm not just investing in these random companies that are cheap and that have low market caps. No, I'm researching them. I look at their business model. I see if they're overvalued, undervalued. I look at their revenues. So I already explained this in these other videos that I made on them. But again, you should do research on these stocks, these riskier stocks. So you don't choose just random risky stocks, because there are a lot of risky stocks. You should choose educated risky stocks that you're confident in as an investor. And even though, they are very volatile, because Gorilla, I've tracked Gorilla every day. It's up and down every single day. It's very, very volatile. It's way more volatile than the market. They have, in a single day, Gorilla can have a 10% movement easily. You see, it moved 22% on Friday. That's unheard of in the market. So again, it's nice to have the 20% of your portfolio that just leaves room for growth. And obviously, I can understand why it'd be tough as an investor to invest in these riskier stocks. And that's why I made videos on these two specifically, of why I don't think they're as risky as, any other risky stock. But, I think it's important to have these growth stocks that can truly accelerate your portfolio. So, I chose Gorilla and Rigetti, smaller companies. I think their business model is growing. I think they have the chance to grow a ton in the next couple of years. Obviously, you have to be patient with these stocks, as you do with the entire market, because they go down, they go up, whatever. But I think it's very important to have that 20% to just leave room in your portfolio for great growth. And then lastly, the last part of my portfolio that I recently decided to add to my portfolio and to my strategy is crypto. And I wasn't very educated on crypto before, like a couple months ago, honestly. I was only really into stocks. I know on Fidelity, they don't even allow you to trade crypto. So it wasn't even on my mind, but I kept seeing stuff online about crypto, how big it is, how big it's going to be, whatever. So the thing with crypto is that, it's obviously not a stock. It's not tied to anything really. It's kind of just a thing, something that goes up and goes down based on who knows what. But for me, and I think for you too, it's important. I think it's important to be on the trends if you're able to. And I think crypto is something that obviously you're never going to know when it's going to just randomly shoot up like they say it's going to. I know it's already been pretty big over the last couple of years, but it's something you never know is when it's going to just shoot up. But, maybe it does, honestly. And really, in reality, we're living now, and it hasn't really shot up that much yet. So from my perspective, why not just invest a little bit of money into crypto just to ride the ride with everyone else? And just maybe if it does shoot up, you also make money. So that's why I've decided to add crypto as the last 5% on my portfolio. And this was a decision I made a couple months ago, and it's really just 5%. It's not much. 5% isn't a whole lot of money, depending on how much obviously you're investing with, but it's not a whole big percentage of your portfolio. And I think it's important for the little 5% I have, and I know for me it was like $400 or something. I invested in XRP, and that was my personal decision. I did research. I was like, all right, Bitcoin I could invest in, but XRP is also great. And that XRP, that little $400 I made, that more than quadrupled. And that's important because, if I had invested that small $400, which isn't that much money, I wouldn't have made a lot of money. And I did end up making a lot of money, even though it was only 5%. So I think that's something to keep in mind. I know a lot of investors they either love crypto or they hate it. And I think even if you don't like it, I don't really know what it does. I'm not really sure what the point of it is. Even if you don't really know, I'd say just put 5% of your portfolio in crypto just in case something big happens, really, because, again, it's very risky. And it's up to you whether or not you want to put this extra 5% in the mutual fund or maybe a safer stock. But for me, I think it's smart. I don't know if it's exactly smart, but I think it's worth my money to be putting it a little bit in crypto, at least, to maybe see what's going to happen in the future. So let me know in the comments what you think about my strategy, and also share your strategies and things that I can fix, because I always really want to learn and ways to fix my strategy and change it. And that's really what I've been doing over the last year and a half. So yeah, let me know in the comments, and thanks for watching.